Good morning, everyone. I'd like to call this meeting of the Insurance Rate Review Ad Hoc Committee to order. And we'd like to start off, Representative Gatch is going to say a prayer for us this morning to get us started. Representative Gatch.
Thank you, Mr. Chairman. Dear Heavenly Father, thank you so much for this day, and thank you for everything that you do for us, Lord. Thank you for allowing us to arrive here safely. We ask that you would continue to protect us and protect our families, protect those and their families who are here, Father, as we try to do your work, as we try to do the state's work. Lord, I pray for wisdom. I pray for discretion. I pray for discernment. I pray for knowledge, Lord, for all of us here, that we would be able to do the right things the right way, that we would be able to do the things that you would have us do your way, Lord. I pray that our words wouldn't be our words, that they would be from you, Lord. And God, I pray for just the spirit of unity while we're here, Father, and we're separated by geographic location, we're separated by R's and D's, we're separated by scorecards and all the rest. Father, I pray that the most important thing that we would be united in is trying to do the best we can in your will for the citizens of South Carolina, that we would be able to get something across the finish line that gives glory to you, but also protects the citizens that we hold dear and who ask us to be here to do their work. So we love you and we praise you in Jesus' name. Amen.
Thank you, Representative Gatch. Good morning, ladies and gentlemen. I'm Representative Roger Kirby. I am filling in today for our esteemed chairman, Representative Brewer, who could not be here because of another engagement. I'd like to start off by asking the members of the committee to briefly introduce themselves, and we'll start over with Chairman Hickson.
Thank you, Mr. Chairman. I'm Bill Hickson. I represent House District 83, which is Aiken and Edgefield County.
Thank you, Mr. Chairman. I'm Carla Schusler. I represent District 61, which is Horry County.
I'm Representative Craig Gagnon. I represent House District 11. That's Abbeville, Anderson, and Lawrence counties.
Good morning, everyone. I am Representative Jermaine Johnson. I represent House District 52, which is Richland and Kershaw County, also better known as God's Country.
Wait a minute.
And I'm Roger Kirby. I live in Lake City and represent House District 101, which is Florence, Williamsburg, and Berkeley County.
Thank you, Mr. Chairman. I'm Gil Gatch. I represent House District 94, and that's Somerville, South Carolina. We almost won the state championship, but that darn Dutch Fork, man, they keep getting us 2 years in a row. But I represent Dorchester and Charleston counties.
William Bailey, District 104.
Melissa Aremus, District 84, Aiken County.
Thank y'all. And we've also have staff here with us from LCI committee that is with us and do such a great job for us. So the plan for today is to hear from LLR as well as the independent insurance agents. And then we'll have discussions of some legislative ideas based on discussions that we've had over these past months and testimony that's been received. And our plan is to actually prepare a bill for pre-filing from the work of this committee. So as we appreciate all of you being here with us, and a lot of you been with us on this journey that we've shared in an effort to try to do what we can in the legislature to have positive impact on reducing insurance rate structures for our citizens, and to be sure that we are doing all we can to be sure we have a very strong insurance market and pool. So we're going to jump right in to testimony. At this time, I'd like to call representatives from LLR to please come forward, come to the podium. We have Virginia Wetzel and I think Molly Price here with us today. So, Ms. Wetzel, if you will be sure that green light's on. There you go.
Can you hear me okay?
Okay.
Yeah, you seem so far away from up here.
You guys are a long ways down there.
So just if you would, please state your name and your title for the record before you speak, and then we'll look forward to your testimony. So thank you for being here with us today.
Sure. Thank you so much. My name is Virginia Wetzel, and I serve as the Governmental Affairs Director at LLR. Today I have with me Molly Price, who is the Program Director over our building boards, which is contractors and residential builders. She's a great resource and will be super helpful for this discussion. Today we wanted to come before you and kind of walk through how we are engaged in any sort of enforcement of fraud, insurance fraud directly related to roofing. Chairman Brewer alerted us that you guys have had testimony over the last couple of months related to this topic, and specifically asked for us to come and share with you what type of cases that we see come before us. So I wanted to kind of give a brief overview of our enforcement authority at LLR. We are a complaint-driven agency. So any type of problems that arise from a result of the services provided by our licensees are complaint-driven, and then we pursue those complaints through an investigation and prosecution if needed. And our board makes a final decision based off of which licensee it is impacting on the type of sanctions that are applied to that licensee as a result of their actions. So our authority stops with disciplining a licensee. That can range from suspending a license, revoking a license, and many other things that are related to the license itself. So I wanted to kind of go ahead and set that stage for you guys. As far as our building boards go, we have received a very minimal amount of complaints related to insurance fraud directly tied to roofing. Insurance fraud in general on the building side is pretty rare. As I mentioned, we're complaint driven, so we don't have a whole lot to report. I believe in the last 10 years, we've seen maybe under 10 that we've dealt with. So it's not common. So I wanted to go ahead and share that with you. As far as the medical side goes, we do receive a few complaints from time to time, specifically tied to maybe Medicare fraud, Medicaid fraud, but those are a low volume as well. So that is basically what I wanted to share with you today. We are happy to answer any questions that you have tied to those complaints. So ready and willing to field those questions.
Very good. Thank you. Ladies and gentlemen, any questions from... Yes, sir.
I guess my question when we were talking about the roofing industry.
Yes, sir.
And you said you had very few complaints. Does that surprise you?
You know, the more that we have thought about this on our side, we started really analyzing who files a complaint. Oftentimes it's a homeowner as a result of maybe substandard work on that roof or abandonment. Maybe the contractor or the residential builder has started work but abandons the project. Those are various types of complaints that we do get and that we do prosecute on our side, but specific to insurance fraud related to roofing, it doesn't surprise me because I'm not sure if the homeowner themselves would be the particular person to file that complaint, or you know, we just don't get a whole lot of those. So,
and typically, if we're talking about fraud, we're talking about somebody who was able to get a new roof from using the insurance, and you wouldn't have a complaint made to LLR.
Yes, sir. Correct.
Right.
Yes, sir.
Thanks.
Very good. Yes. Go ahead, Joe.
Thank you, Mr. Chairman. Hi.
Hey,
You're very small down there.
I'm trying. Okay.
What ability does LLR have to go after, let's say, roofers who are practicing and conducting business without a license?
So that would be an unlicensed practice case, which we don't have jurisdiction over unlicensed practice. We would be able to, I think there's a citation attached, a cease and desist, but beyond that, that is the limits of our authority.
Who has jurisdiction over unlicensed practice?
It's a great question. I mean, if it's a criminal situation, a civil situation, then, you know, there's other entities in the state that could pursue that. Oftentimes, we have local jurisdictions who are permitting actual roofing repairs and that type of thing. If they realize that the roofer has not gotten a permit, then that's something that they could turn over to law enforcement, I suppose, but it's not really within our jurisdiction, so I can't really speak to that.
So is that something that needs to be remedied then, that LLR would have the ability to go after unlicensed roofers?
Yeah, so it's not that we necessarily don't have jurisdiction, it's the limit of what the jurisdiction is, I guess, in a way. So we can issue a cease and desist. Thankfully, with these two boards, the cease and desist comes with a penalty of $500 for that first violation. Because we're an enforcement agency on the administrative side, what we're really hoping for at that point, in most cases, because, you know, some people just legitimately don't know a license is required, that they would pay for that money, or they would pay that $500 and then go get compliant and do things the right way. You know, having licensee or, you know, potential licensees or people in the state practicing do things the right way is usually our end game from an administrative standpoint. If they violate the cease and desist, yes, there are remedies where we can take them through the administrative law court. I believe they can face up to a misdemeanor penalty, but that's essentially where our limits stop. And it is a problem in this state. It's a problem more than just roofing in this state, and we know it. Licensees know it. And that's why from, you know, the standpoint of us being a regulatory agency, but also, you know, I don't think any of us would be doing this job if we didn't care about public protection. We're constantly trying to communicate to the public. That's why we have the resources on our website to check licensees. That's why we're trying to make sure that people know what those resources are, so that they don't get in that situation where, you know, we can't recover their money or anything like that. So, you know, we certainly have people, and we always encourage those to file complaints with us for unlicensed practice so that we have a record of that, so that we can potentially cease and desist that individual to protect others. But it really comes down to, you know, from a consumer protection standpoint, we're always trying to communicate to, you know, I speak around the state to building officials, to consumers, to anyone, you know, who I can, trying to explain you've got to do a level as a homeowner too and make sure you're hiring licensed and qualified individuals.
Thank you, Mr. Chairman.
Very good. We've got several questions, Molly, so just hang tight. Chairman Hickson?
Thank you, Mr. Chairman. I'm in the insurance business, and we write a lot of bonds for contractors. I've never really understood the process, because if I'm writing a bond for an electrician or a plumber, the state requires them to have some bonds. But the state of South Carolina is shown on there would be the amount of money would go to them. So if a person has a complaint, an individual, like somebody's working on their house, and they have a complaint against this plumber or electrician or whatever, but the bond money is indebted to the South Carolina, how does that person ever collect any of that money if they've been damaged or whatever, and the state is the recipient of the money?
Yes, sir. That's a great question. So you've got two scenarios here, obviously, because we have the commercial board and we have the residential board. So with the residential board, those bonds are payable to the state. And the reasoning for that is if you file a complaint with this state and that bond is now in play, as it goes through the course of that investigation process, and say there's a hearing before the board and wrongdoing is determined, as part of that hearing, the board will also determine if that bond is going to be at play, I guess, for that individual, and if they can pull on that bond. So in the situation where that then occurs, then we will notify the bonding authority that, you know, here's the investigation, here's the order, and we are, you know, essentially granting that individual the ability to pull on that bond. Now, when bonds were added as an option on the commercial contractor side, which I think is important because you also have a lot of commercial contractors doing residential roof repair, those individuals can either qualify for licensure with a financial statement or they can qualify for licensure with a bond. It's an either or scenario, and it's much higher bond amounts than the residential board has because it's based on, you know, commercial construction primarily. That board, when the bonds were set and the legislation was passed, was done differently. It was done where you can, if you see that an individual has a bond or a company has a bond, you can fill out a bond request form through us. We will send you a copy of that bond, and then you file your claim directly with the insurance agency. So LLR is not involved in that. I know there's some people in the industry who would disagree with me on the insurance side. It's a much more effective way to protect the public and get the money to the public quickly. You know, depending on the LLR investigation and waiting through that whole process, I mean, if it's a roof, what if that individual's roof's still leaking? What if they, we have to go through the course of our whole investigation before we can get to a hearing. And frankly, you could be, months delayed. I mean, there could be witnesses that have to be there, conflicts with attorneys. So it seems to work a lot better on the commercial side, where if you have a complaint against a contractor and you feel that bond should be at play, that you can go directly to that bonding authority and request money under that.
So when is the last time the amount of the bond has been visited? Because it's mighty low. And I'm
very
not
low.
speaking as an insurance agent. I'm speaking of somebody who would be damaged when you only have to have a $5,000 bond or whatever. And the bonds aren't that expensive most of the time.
They are not that expensive at all.
But if the person is never made whole again if they're going to depend on the bond.
Yeah, having a $5,000 bond for roof repairs is quite discouraging to me personally. I don't want to speak on behalf of the agency, but I do know that it is very low from that standpoint, and it does make you wonder from a public protection standpoint, because what if that roofer goes out and does it to 3 different homes? What we're going to tell them after a year of investigations and hearings, you now can split $5,000. So I understand, yes, sir.
So is the money initially awarded to the state, and the state gives it to the person that got damaged?
So I have to tell you, I have not done one with residential. I used to oversee the commercial board as the executive of that one, but it is structured, and I did oversee the manufactured housing board, and when we had those, we would actually just direct them through the board order for the final order for the disciplinary hearing, and they would issue the check directly to the individual.
Thanks.
Very good. Thank you. Hang tight, Ms.
Yes,
Price.
sir.
We've got a few more here. Representative Bailey.
Yeah, sticking on the roofer theme, I was kind of wondering, because a lot of this stuff originates from the on-site solicitation. Is there anything that LLR does that could kind of control that roofing company soliciting on-site and indicating that they can put a roof on when possibly there's not even a roofing issue?
That's where I think I've been on the news a few times the last couple of years and other things doing, consumer protection things and trying to explain to the public that if they're in your area, especially after a disaster, and they're soliciting business, they're not there for the right reasons. And there are I'm sure y'all have all had worked on your homes recently. I know I have. I just tried to get a fence recently. It took 3 months to finally get it because the good contractors are busy right now. And I think that's the public protection standpoint of trying to encourage individuals, get the best line of defense I tell people is personal recommendations. You can go on the LLR website, confirm information, but the best thing you can do to protect yourself is make sure that you talk to someone who has used that individual. And typically you're not going to get that with the door-to-door people. So it's definitely a level of trying to get that information to the consumer, which we do try to do, and I wish we could do even more of, not just our agency, but everyone.
And I understand that, and I appreciate that. But what I'm trying to get to, though, is when you see someone who is providing that particular service and they stick a sign up in a community that says, want a new roof, call 1-800. Is there something we can do to make sure that you're wanting that service, not me initiating that you want that service?
Right. So if that came in the form of a complaint, say you saw that sign and you filed a complaint with LLR, and we were able to investigate it and determine that it was unlicensed practice from that standpoint, we would issue them the cease and desist. And as part of that, like I said, we're trying to explain compliance and getting compliant. Will they ever pay the fine?
And we're back to the fact that if I'm wanting a new roof, I don't have a complaint. And it's very unlikely that the insurance company is going to call you and complain because they're not out there looking for these things.
Absolutely. So
if we know that kind of conduct is occurring, is there anything that LLR can do to address these people who are soliciting roofing jobs when they might not even need a roof? They're going up, they're taking a ladder, they're going up, going, we can get you a roof. Yeah, I found some hail damage and there might be one shingle that's bent. Is there some type of code of conduct or something that we can add into the requirements for the licensing process that prevents them from doing an on-site soliciting until you're called and asked to come? Right. Because I think that's where the fraud's occurring, because you see people, especially in the beach area, after these storms, just going up and automatically getting people $20,000, $30,000 roofing jobs. And I never even wanted to call, but when you told me I was going to get a new roof, of course, go up there and get it.
All right, so if that individual is licensed, then I believe that would fall under our misconduct. If they are unlicensed, you are absolutely correct. The homeowner's not going to file the complaint if they're getting a new roof. We're never going to know about it because we're concerned with licensing misconduct.
So you're telling me that someone who is licensed to do that type of work in this state should not be going on site soliciting a cold call and just soliciting that type of work when they're not asked to give them a estimate?
Oh, no, I think they're definitely within the right to do that. I guess I'm saying if they're then performing misconduct and we find out about it, that we could potentially discipline their license for that. But it goes to your other point of who's going to report them, and that's the problem we're in. So to go back to the unlicensed practice piece, I did some research on this over the last couple of days and reached out to some of my counterparts in other states to see how they handle some of these similar issues. I found some very strong language in Florida and Alabama for how they handle these situations, primarily after a natural disaster, which I think is really important for those of you on the coast and where this is coming up. So what they have is language, and Alabama is the most recent one. They pretty much copy Florida. I will tell you, North Carolina, last I heard, is looking at a similar bill for next year. Because of what happened in Asheville and everything and what they saw. So what this bill essentially, or what this law does in Alabama, is it follows the board's authority as far as the administrative practices for, common unlicensed practice, advertising and things like that LLR can deal with. At the point that it rises to, like you said, they're soliciting in a neighborhood because there was a bad storm or a disaster. There are provisions in their law that then require that to become a felony, and that is then handed over to a prosecuting authority, whether that's the attorney general, the solicitor, but there are thresholds in place in their law for when it stops being administrative and when it becomes criminal, and a lot of that has to do with declarations from the governor. So the only states I could find were Florida and Alabama, and California has some stuff. I believe California is looking at strengthening theirs too after the wildfires. But I do have the language from Alabama. I'd be happy to share that with y'all. But I talked to their attorney general yesterday that handles those cases, and he said that, it works very well. It's a very good collaborative effort, so it does not restrict the board from the misconduct parts of licensure. But if it rises to the point where you have a consumer protection issue post-disaster, it gives very strong language of, okay, this is now a felony.
Right, and the point I guess I'm trying to make is that if in a perfect world, yes, everyone would call in and complain and say this is happening or that's happening. But when you're directly benefiting from getting a $20,000 roof because somebody knocked on your door and said, hey, I can put a new roof on your house, they're not going to call and complain. So I was just wondering if there's something that we can do from your standpoint to add in the licensing process that says you cannot do an in-site solicitation. And I know that you need to do some of that, but there's some kind of language that you could plug in to say, we don't want you doing on-site. We want them to call you and invite you to come give them an estimate instead of you going door to door and trying to drive that issue. Right. And I didn't know whether there was something that we could do for the licensing process that put that requirement in there.
Right. Because obviously we don't know how many of those could be out there because they're not getting to us. But I would say from my experience and what I've seen, I don't know that would change anything because I believe the individuals who are doing that are unlicensed. I don't think it is the licensed contractors that are doing the door-to-door solicitations.
Well, I venture to say that they are.
Okay.
Because
that could be the case,
I know
yes, sir.
some of the largest roofing companies in Horry County that are actually doing that.
Sure.
And what I'm trying to say is that if part of your licensing process is that you will not do a cold call and knock on somebody's door and tell them they have a problem, that would solve a lot of, we don't have a lot of folks who are just jumping out there doing roofs that aren't licensed. I mean, that went out in the 80s and the 90s in Horry County. That might be everywhere else, but typically in Horry County, it's well regulated. Everyone has to have a business license. You have to have all the proper insurance. We don't have that kind of issue. Now, in the rural counties, you may have somebody showing up with a pickup truck and 5-10 squares of shingles. But what I see, and what I see every day, is someone who can go through the expense of putting a billboard up saying, need a new roof? Call me. And that's where I think the fraud is occurring, because people are being convinced that now's the time to get a new roof, whether you have damage or not, because I can get it for you. And I'm just wondering how we can overcome that through the licensing process, or if we even could.
Sure. I would certainly agree with you right now that they absolutely can do that under the current laws, but I have not thought about it the other way, so I'd be happy to look in that too.
Thank you.
Very good. Ladies and gentlemen, if you just felt a really cool breeze blow by you, it's because we are now joined by our esteemed chair of LCI, Mr. Bill Herb Kurtzman. Welcome. Welcome, Mr. Chairman. Thanks for being with us. We have another question, Representative Johnson.
Thank you so much, Mr. Chair. So I'm in the insurance business also, and I know right now insurance costs are just going, skyrocket through the roof, and deductibles are high and everything. So I know in Richland County, I believe it's up to $5,000. You can actually do your own repairs on your home without like a license, but I think you just need to get a permit. I believe you just need to get a permit.
It's $500.
Oh, okay.
Yes, sir.
Well, all right. So got to get your permit and everything. So my concern here is thinking about the oversight when it comes to if I want to do my own repairs on my home, but how does that also work if I have an elderly in-law or I have an elderly parent and they live, down the street or something? What is your opinion on that? And do you all have any oversight against that, or is that something we need to look at doing as well, making an exception to doing parents or in-laws or elderly individuals?
Yes, sir. So we have what's called the owner builder waiver, and that is a document that if you want to do repairs to your home, you could go build a home if you properly filed that. And what that says is you will be the one occupying that home for 2 years. So basically, when you file everything with the Register of Deeds for that jurisdiction, it is on file that you did the work. You still go through the proper permitting and proper inspections, but it authorizes you to do the work. I would have to look at the exact sentence there. I believe it does say family members as well, but it has to be basically a member of your immediate family living in that dwelling. But there is a process with no financial limit that you can do for your own home.
So immediate family, does that include in-laws?
I'll have to look at the exact sentence,
Okay.
but I think it's on there.
Cousins or somebody like that?
Yeah, but there is a process, yes, sir.
Okay, because we're all related in Hopkins, so, I just wanted to know.
Very good. Okay, ladies and gentlemen, yes, Representative Gatch.
Thank you, Mr. Chairman. So what's your stance on the assignment of benefits between insurance companies and, say, roofing companies?
I don't know that part of it. For as far as licensure, it's not something we're really dealing with.
Well, I mean, there are instances where a fraudulent roofer will say, don't worry, homeowner, I'll take care of it. It's all good. They go to the insurance company, say, hey, give me the money. So there's this sort of third-party interaction between the homeowner's insurance company and this fraudulent roofing company. And then they overbill the homeowner. Do you not have a position on that?
Yeah, I would say we definitely, under the current laws too, that would fall under misconduct, and we would have authority to do that. I think it just goes to the point of who's going to be the one to file that complaint. So whether or not if the insurance agencies filed that complaint, then yes, it could still be investigated by LLR. I guess the question would come into is how cooperative would the homeowner be in that situation? And because, we would need witnesses to pursue that and things like that. So I do think our laws currently would cover that level of misconduct. I would say we don't get those type of cases, though.
Well, what about then having like a bond for each job, and there being requirements under the bond that would prevent the actual fraud? Because if a roofing company has to upfront a bond, they're going to be, don't you think disincentivized to be playing funny games?
Yeah. And yeah, I would agree with that. And I also think that if we had some level of making sure that contractors were licensed, that those checks were going to, I think that would protect the homeowners as well. But I know that's hard as well too. Yeah. So and I can tell you plenty of examples where individuals came in, did the door-to-door, or came in after a huge storm. The example I gave everybody was the Rock Hill hailstorm a couple years ago. Almost every single roof in Rock Hill had to be replaced. We did have a lot of people coming from across the border with the wrong intentions trying to get those checks. The building officials were trying to catch it, the building inspectors. It was just, if you end up in a situation like that post-disaster, your government officials can only do so much. They're going to end up at some point complaint-driven as well.
And it does seem that natural disasters really fuels these issues when we're dealing with fraudulent contractors across the board, whether it be roofers or otherwise. I really appreciate that. I want just a quick follow-up, if I may. In thinking about LLR's basically field of available means to deal with these things. Y'all really are more of a disciplinary type. Your ability to impact people who are not licensed and all those type things is very limited, is it not?
Yes, sir. We are very much misconduct of licensee driven when we're looking at issues like this.
Have there been any cases where LLR would have referred cases for further investigation by law enforcement, or is that completely outside of your scope?
Honestly, I don't know that we've had any in my time that we've gotten to that point. We collaborate with law enforcement a good bit with misconduct, and we will provide them with the information they need to make their case. Obviously, from a public protection standpoint, if they can get some of these bad eggs criminally, that's what needs to happen anyways. So there is obviously that collaborative effort there. And that would be the thing, too, with strengthening any of this on any end, is we would hope that that collaborative effort could remain, because a lot of the times it could be licensee misconduct and not just unlicensed practice. And that's certainly something that we would want to, take a look at to protect the public going forward as well.
Good. Ladies and gentlemen, any other questions? Okay, hearing none, we really thank y'all for being here today. Thank you for taking time. I know y'all are busy, but we appreciate you taking time to be with us today. So thank you very much.
Happy to be here. Thank you very much.
Okay. Ladies and gentlemen, next up we have the independent insurance agents. And I think today we're joined with Ken Finch and Gus Brabham. So, gentlemen, if you would, please come forward, and if you would, state your name and your position for the record.
Good morning, Chairman Kirby and committee. My name is Ken Finch. I'm the Big I is independent insurance agents and brokers, South Carolina. We're glad to be here to meet with you this morning. I'm Executive Vice President of Correll Insurance Group. And I'm followed here with my colleague, Gus Brabham, who's Senior Partner with Brabham Griffin Insurance. And we're also joined by Becky McCormick, who's Director of the Independent Agents and Brokers here in South Carolina. My background is that of 48 years in the property and casualty business of insurance. And we came here this morning to address some of the issues regarding rate and the current market conditions in South Carolina. The reason the Big I is here, and that's what we nickname it, the Big I, we're the largest distributor of property and casualty products in the country, as being members of that. Probably about 62% of all consumer products through property and casualty insurance is delivered through an independent agent. In South Carolina, that number is about 57%. And in South Carolina, we have about 300 agencies represented by about 3,000 different insurance agents. The typical insurance agency in South Carolina, they have anywhere from 10 to 12 markets they represent. And that number varies depending on the agency size. The size of Correll, we represent and have access to over 300. So it just depends on the market. But it is one of the most viable market distribution chains in the country. So over the past 3 or 4 years, as you know, insurance rates have been a huge topic of discussion. The rates are basically being driven by two factors. One is weather-related events and the other is litigation. As far as weather goes, 2024 was not a very kind year to the insurance industry. There were approximately 7 major tornado outbreaks in the country, 1 major fire out in California, 6 cyclonic events. South Carolina experienced 2 of those, Hurricane Helene, and then we had to best of luck, in 30 days we got followed up by Hurricane Milton. Ask you to remember that the insurance industry is a cyclical marketplace. We have bad years, good years. We are just coming out of what is known as a hard market, and hard markets last anywhere from 2 to 5 years. Before that, we were in a soft market, which normally lasts 7 to 12. The last one actually was about 15 years. And in recent months, we've started to see some let up of the rate structure, the rate increases. Just yesterday, on Monday, there was an article published by AM Best giving an outlook for the coming year, 2026, and it pointed to what we're now seeing. We've been seeing this since probably about July, when reinsurance rates were negotiated again, and they're done in June, July, and January. We're starting to see rate decreases, and the rate increases are much smaller. And for 2026, we're also hearing that the January reinsurance market will be down a lot, which is a good thing for the consumer. And because at the end of the day, we are advocates for the consumer. We drive the product to the consumer. They reach to us for not only advice, but being able to access multiple carriers and a lot of different products. With that being said, the insurance marketplace is best as an open marketplace with I won't say few, but with limited, government oversight and intrusion. To give you a great example of that, Georgia and both Florida have just come through that. 2023, there was some major legislation passed in those two states in regard to not only financial structure, but also to litigation and cost. In Florida alone, since 2023, when the legislation went in place, there were 17 new carriers came into the marketplace, and for 2026 or in 2024, only 33 of them filed for rate decreases. 17 made no filings at all for rate increases. Citizens Insurance Group in Florida, as you know, is the state-funded program for property insurance and so forth. It has been a dumpster fire for the last 20 years. Their exposure has been decreased down by $300 billion. And at the end of 2025, there's only estimated to be about 500,000 policies in Citizens Insurance, which is a huge reduction. So I say this because in other states, when legislative got involved in rate suppression, rate capping, limiting rates, it has turned ugly. We've seen that in California with the excess of insurance companies. Other states, Michigan, Louisiana, Illinois, they've all attempted to remedy the marketplace through rate limitations and suppression, and it has not ended very well. In South Carolina, we look for rate oversight, the carriers do, with the Department of Insurance. And for the years, that has always been proven to be a very adequate measure, and it still continues to be one. To get into start limiting rates or suppression rates, there's some warning signs, and I would ask you to use a lot of caution in doing so. One is it will begin to reduce availability of markets. It can create unstable markets, financial instability in the marketplace, and it can lead to carrier withdrawal. And right now in South Carolina, the last thing we need is for a carrier to start exiting the state. They've already paused, some of them have paused writing for a while. One came in back in August and suspended new homeowners for about 7 months. They're now back in the marketplace. So over-regulation can create a monster of problems. And the other thing is limiting rates or rate suppression does not change the exposure to the risk. I mean, if the chance of your house burning was 1 in 100 before we limited rates or suppressed rates, then it's still going to be 1 in 100 after we suppress rates. So there's really no advantage to doing that. Things like hurricanes or weather-related events, severe storms, and reinsurance costs is something that the legislative issues or government issues cannot address at all because it is something out of our control. In the past 15 years, we've seen what limited regulation has done. And if you look back at workers' compensation and the private flood market, it's provided wonders for us. We now have over 20 private write-your-own flood programs that's in competition with the NFIP, which is great for the consumer. We probably have 5 to 7 times more work comp markets in South Carolina than we did 15 years ago. And actually, if you take a business and look at their work comp product and you adjust it for inflation, it's probably cheaper now than it was 15 years ago. So that's the advantage of having an open marketplace and what it can do for the consumer. And we're all for doing that. As far as the flood program goes, I'll give you a great example of what Free Enterprise does.
Excuse me 1 second, if you don't mind. We had a couple of people who might want to ask a quick question. I'd hate to interrupt you mid-sentence there. Representative Gatch.
Thank you, Mr. Chairman. Good morning.
Good morning.
How are you today?
I'm great.
That's great. Me too. Yeah, I'm doing great as well. I'm well as well. Yeah.
That's good.
So I have a couple of questions for you, if you don't mind. You said in part of your opening that the two main drivers for the increase in insurance rates are weather-related and litigation.
Yes.
All right, and you're referring to the underwriting profits that are being lost by the insurance companies, correct?
Yes.
So the insurance companies claim that their underwriting profits are being lost because of two main issues, which are weather-related and then plaintiffs' lawyers who are filing lawsuits. Is that right?
Some of the hindrance in South Carolina is just those two things. I'm not dwelling on litigation costs at all. Weather-related events have been horrendous in this state for the past 4 or 5 years.
Okay, but I guess what I don't quite understand is we know now, after having lots of testimony in this committee, that when we're talking about underwriting profits, we're not even touching float profits, right?
Possibly, yes.
Is it possibly, or is that correct?
I'd say that's correct.
That's correct. It is. So we're not talking about $169 billion in float profits. We're only talking about underwriting profits. And the underwriting profits is that's what's driving this push by insurance companies to increase their rates that they don't want to do, they say, but they have to because of the two things that you mentioned, litigation and weather-related issues, right?
Yes, but I would say that's probably more of a question to the carrier than to myself.
Sure. Well, you offered the two driving factors, so you kind of opened the door there a little bit, I think. So my next follow-up is going to be, we also found out that when they're getting the premiums from the people who are paying, like mom and pop shops and people who live in rural South Carolina and people who live in Somerville, they're paying their premiums faithfully on their car insurance, on their homeowner's insurance, on all those things. That goes into the bucket of the underwriting profits. And then there are certain things like the weather-related issues and like the litigation costs that sort of suck the profits out of the underwriting bucket, right?
I would say so.
Yes, sir. And also, do you know that also coming out of the underwriting profits are things like advertising? Did you know that?
Yes.
And do you know how much just Progressive alone spent on advertising in 1 year?
I know it is a monster number.
What do you what's the number about?
The last, I don't have an exact number. I've heard it's in the billions of dollars.
It's $5 billion. $5 billion with a B dollars. So when a person who represents the insurance industry comes to me and goes, the two driving factors in the raising of rates in South Carolina and across the nation are weather-related events and litigation, and they fail to mention that one company alone spent $5 billion on advertising, it doesn't come across like it's a sincere, transparent beginning to our conversation. Would you agree?
No.
Okay.
I am being sincere.
I'm sorry?
I am being
It's hard
sincere.
to hear because there's like 4 people talking over here. I'm sorry, say that again.
I am being sincere. As a student of insurance, I understand the rate makeup. And I get it. Everybody's entitled to a profit. But the rate makeup and the availability of products is based on the profitability line of that profitability of that line of business.
Yes, sir. But do you think that a normal citizen, just a person, a blue-collar worker who's working 9 to 5 or working 40 to 50 to 60 hours a week, and they hear an insurance company representative say, we're going to have to raise your rates because plaintiffs' lawyers are filing lawsuits and there's acts of God, and then they find out that one company alone is spending $5 billion on advertising alone, do you think that they're going to sense that that's a really honest beginning to a conversation, or do you think that they're going to think, man, they're hiding the ball? $5 billion on advertising is being spent by a company like Progressive, and at the same time they're also saying, and we're really struggling to get profits. We need to raise those rates. I'll say it like this. Don't you think it's fair to say that a company who's spending $5 billion on advertising is actually doing really well and they're not struggling to do business?
I'm not aware of their financial spreadsheet.
Okay. We also found out that planes for CEOs, CEO salaries, like the Chubb CEO who just made $33 million by himself in 1 year, you would agree that all of those costs for insurance companies also come out of the underwriting profits bucket, correct?
Yeah, it's just like any product you manufacture.
That's right. So again, that's another sort of a missed detail. When just one man is making $33 million by himself a year, don't you feel like it's not super transparent, authentic? I don't know, you could almost say honest when the company says we need to raise the rates on the little guy because of acts of God and plaintiffs' lawyers who are filing litigation for people who are victims?
The issue I have with your argument, and I don't want to argue with you, is that those costs although they sound big, in the overall scheme of things, it's actually a small percentage.
$5 billion is a small percentage?
In compared to what Progressive's total number is.
Okay.
I mean, it's not like the $5 billion is 42% of their operating income.
How much did they spend? Do we not know how much they spent on plaintiffs' lawsuits
I
on
don't
victims?
have those numbers in
Okay.
front of me now.
Couple more things. When we interviewed and had testimony from, I think it was Allstate, Progressive, Farm Bureau, and I think USAA, they were here. State Farm, I think. Okay. They were here. And then they all gave almost a carbon copy presentation saying that they needed this relief from this committee. They needed us to hear about these particular things. They said that punitive damages need to go away, that Tiger River needed to go away, and that phantom damages that are inflated unnecessarily and falsely by medical providers should go away. Do you agree with that?
To say they all go away, I'm not sure I agree with that. I think there needs to be some reform on some of it, but not totally go away.
Now, could you say that for hypothetical purposes, that if we were to get rid of punitives, destroy Tiger River, and come up with some type of a solution for phantom damages, that it would guarantee either the reduction in or the stabilization in insurance rates?
I would say it would have a huge impact.
Do you know that none of those companies would say yes?
I'm not a company person.
But
Again, we advocate for both, for the consumer.
so do you think that they would know more about it than you particularly would?
I'm not saying they do or I do. I just think if you limited, and we've seen evidence in Florida, what they did, some things they did to limit some stuff. I don't agree with totally doing away with those kind of things. I do believe on having some sensible reform to do on some of them, though. I think it would have an impact.
Do you know that a person with a higher credit score has a better rate than the exact same person who has a lower credit score with an insurance company?
When you say an exact person, what do you mean by that?
If you take a woman of the same age, of the same, she has the same degree, she's of the same race, she's of the same marital status, she's of the same amount of dependents, and you take away the one factor between a good credit score or a bad credit score, that a person with a bad credit score has a much higher insurance rate for the exact same coverage?
Yes.
Why is that?
I saw some data years ago, and that lower credit scores tend to have more claims. And there was actually some data backing it up from 2 insurance companies. That's a big part of it, from my understanding. I'm not the one that did that. I have seen some of the data over the years. So there are more claims, frequency of claims with lower credit score individuals.
Do you know that females in the same scenario, that females versus males, similarly situated with the same, they own their house, they have a degree, they have the same amount of dependents, they have the same marital status, that a female actually has a higher rate for the exact same insurance coverage?
And what kind of coverage would that be?
It doesn't matter what the coverage is. We're talking about auto insurance.
As an agent, because we're not company people, as an agent, we do not see credit scores. We do not have access to the credit information when we get the parameters to submit to the carrier. So no, I don't have an inside on that.
Okay, thank you.
Okay, yes, good. We got a few more questions. Representative Gagnon.
Thank you, Mr. Chairman. And Mr. Finch, thank you for being here. I'm going to hold off on my question because I think you were about to get to it with the continuation of your presentation. So I'll just hold off on that. Thank you.
Representative Bailey.
Thank you, Chairman. Having your experience, I want to make sure that at least we try to go in this direction and find out and benefit from your knowledge. Of course, we can't do anything about the weather. They say we always talk about it, but nobody can do anything about it. And I think the litigation aspect is going to be addressed with the tort reform that we're currently trying to do in judiciary. So taking those 2 things off the table, if you were in a position to do one thing that could impact lower rates for this state and help our constituents out back home, what would you do as an independent agent?
I think some of the things I would ask for
Just one thing now. I don't want to.
Excuse me?
Just one thing. What would be your top priority that you would want to do if you were trying to lower rates in the state? Just one.
Promote risk mitigation issues.
Okay. Thank you.
It's a good question. Yes, please continue with your testimony. I apologize for the interruption.
So that's where I was going to. So, how do we, as you said, what is one thing I would strongly urge, and that is promote further risk mitigation factors, such as, just like the individuals in front of me spoke of, would be, we already got some, but some stronger building codes, strengthening building codes, not only in the community, but on a statewide basis. We've seen some of that take place and have some effect in the past. Funding some programs such as, roof upgrades, stormwater runoff, not only in the communities, but on a statewide basis, but helping those communities deal with it. We saw this issue right here in Columbia 12, 15 years ago with the big flood. Some wildfire mitigation, as we saw down in Myrtle Beach last year, the wildfire how it spread down there, providing some education. This could be done through grants, tax credits, loans, these kind of things. But risk mitigation is a major thing. And also, finding a way to better educate the consumer on how to use some deductibles, some financial ability, understand credit scoring, how it works, and doing coverage reviews. It could lower future impacts of premiums. And then lastly, I'd just like to give you a couple of statistics, which I know is going to may err some of you. South Carolina ranks 34th out of 51 states, and that includes D.C., so there is 51 to a degree, of overall insurance profitability. Industry, South Carolina's is at about a 6% profitability rate. The nation's about a 5.6. We can take everything in line. Homeowners in South Carolina, this is underwriting profitability. In 2024 was 105%. U.S. average about 61%. 5-year loss ratio profitability factor for homeowners about 62% in South Carolina. So with that being said, we're not asking for the world. We're just asking to use some caution in what you do to suppress or limit the marketplace. We want what's best for the consumer at the end of the day, because if it's best for the consumer, it's going to be great for us, and we understand that. So we come here as your partner, not as a foe. We come here as a partner to partner with you to find some alternative ways to help grow South Carolina, help its citizens, and maintain a long and stable insurance market. So again, I thank you for your time. We look forward to being a partner with you and doing some things. So
we have a few more questions, Mr. Finch. I'm sorry I can't let you go that easy. Representative Johnson.
Thank you so much, Mr. Chair. Thank you so much for being here. I'm also an agent as well. I own a Goosehead Insurance franchise, so I understand the struggle here. My particular question is, the first one is, do you trust the insurance carriers? Because I know you're an agent. Do you trust the carriers?
Yeah.
Okay, so when the carriers came in front of us the last time, and I asked them a specific question, I said, if we did this and if we did everything that you all asked us for, can you guarantee us that the rates will go down? And they could not guarantee us that the rates would go down. So with your recommendation about risk mitigation, and let's say we fix all the roads and we make sure that the building codes are as strong as they could be, and we make sure everything is good, what gives you the confidence that the carriers are going to say, let's lower the rates?
I'm not going to sit here and guarantee anything. I can't guarantee that. Because one is, I don't know. None of us can actually predict the future. I mean, if we have another year like 2025, where we had very little, insured loss activity, yeah, I would say that we would continue to see some rate decreases, and I take that from some things that's happened in the past in years before. But to guarantee it, I don't think anybody. I wouldn't step out on that limb because there's so many unknown factors, and we couldn't touch on.
So that just goes back to my question. So why should we take the insurance carrier's recommendations if they can't even tell us, hey, we're going to do this if you do what we are asking you to do? Why should we take their recommendations if they can't guarantee us that it's going to be any benefit to the people of South Carolina?
I just don't know what I don't know if I'd want to put anybody or myself in a situation where I've got to guarantee something that a lot of it we had no control over. I mean, if we had another major hurricane event in South Carolina, and we had lowered rates drastically, you've got to play catch up at some point in time, and none of us can predict what the weather-related issues are. And so I would say that anytime we go to do risk mitigation or some of those other factors, it's a step in the right direction. To sit here and do nothing and just suppress rates is going to get us in a problem. We're going to see that. We've seen those lessons from other states. But to sit here and guarantee that, I mean, that's no different than you telling me, Kim, we're going to guarantee we're going to lower your taxes. And history says sometimes you can, sometimes you can't. So,
well, to me, it almost sounds like the business that like the insurance carriers are running the state. And we are the individuals, we are the legislators who write the laws and create the regulations for the businesses in the state, but it almost sounds like they're controlling us. And that is essentially my problem, is that if you're going to do business in South Carolina, see, we keep talking about this issue of, we're afraid that carriers are going to leave South Carolina. They're going to leave if we hold them to this standard. They're going to leave. I'm at the point of calling their bluff. I mean, I really am at the point of calling their bluff to see if, all right, well, we know you do pretty darn good here in South Carolina. Well, let's call your bluff and see if you're actually going to leave South Carolina, because you're going to make me spend, all this money, all this time fixing all of your concerns, addressing all of your problems, addressing all these questions that you have, and then when we do it, you're not going to tell me, hey, we're going to lower the rates for the people of South Carolina. I kind of see that as a problem. It's almost like me coming to your job and being an agent for you and saying, hey, if you give me $50,000 extra in a bonus, or if you give me my own office, you give me my own car, I'm going to produce this for you. And then once you say, all right, I'm going to give you all that, Jermaine, and then once you give me all that, I don't do it. And I'm just there. I mean, you would be like, man, with Jermaine, we probably got to fire you, because you're not upholding your end of the bargain. So, I mean, as an agent, along with you, I'm kind of at the point where, man, I'm ready to call their bluff and see what happens, because I've called people's bluff a lot of times before, and I can tell you they don't follow through with a lot of the things that they're alleging. But I really do appreciate you being here. I understand your pain and your struggle.
Thank you for having me.
Thanks. Rookie mistake. Thank you for being here. We've got a couple more questions, but I just wanted to ask this of you. We've had a lot of testimony from not only carriers but different agencies and all that type thing. So it's really good to have your viewpoint here, because, as you said, the independent agents, I mean, we all have independent agents in every town that we live in, and they do a great job. In your estimation, are you seeing the number of carriers coming back into the state growing or decreasing today? Not last year, not year before, but now. How's the wind blowing, as it were?
It's sort of difficult to answer that in an overall base. I mean, if you're looking at a specific product line, we've seen.
Let's look at property and casualty just across the board, if we may.
There's a lot of product lines inside property and casualty, but if you look at the homeowner market, no, we're not seeing a lot of carriers come into the state. If you're looking at the work comp market, oh yeah, they're here, they're popping up every day.
Yeah.
If you look at the commercial auto, personal homeowners, we're not seeing an influx of carriers. Matter of fact, the ones we've got have placed restrictions on us. We had 2 last year that placed some, like no new homeowners, no new auto. So we are seeing that in the marketplace. Overall, carriers entering the state, it could be for different product lines. I mean, Corel Insurance, we developed our own flood program, which is superior to NFIP. But that's the private flood market and the work comp are the two growing ones. The homeowner, personal auto, commercial auto, commercial property, it's eased up a little bit in the past 6 months, but we're not seeing influx carriers.
Good. Okay, and I think Representative Gatch had a follow-up.
Yes,
as well.
thank you, Mr. Chairman. So your statement just a moment ago, sir, was that the insurance companies have no control over the things that increase the rates. Is that
I
right?
said over weather.
They don't have any control over the
I
weather.
said the weather and the reinsurance cost is the two factors that we don't have any control over.
Right. You don't have any control over acts of God, but you do have control over the advertising budget that we just talked about, right?
That's something you need to ask the carrier. They're the ones doing the advertising. I mean, we don't, independent agents, we do very little advertising, and it's not with that kind of dollars. But, I mean,
You're taking a stance, though, on issues, and you're here before us, and we appreciate that.
I am here.
So you're taking a stance on issues. I'm just asking you if you take a stance on this particular one, where if the underwriting profits are a problem, and one of the solutions is increasing rates, one of the solutions is getting rid of punitives, another solution is getting rid of the Tiger River Doctrine, or getting rid of phantom damages, as it's so called. Why can't we add to the table, let's get rid of the $5 billion that one company is using to advertise their services to the public? Why couldn't we add to that, put on the table, let's talk about the reduction of a $33 million CEO's salary for 1 year. Let's talk about reducing the amount of planes and fuel and pilots and all the things, the extra stuff that are taking out of the bucket of the underwriting damages, instead of pointing the finger at the legislature and saying, hey, we need you to stop allowing victims who are injured to recover. We need you to stop allowing lawyers who have bad faith actors on the side of insurance companies from being able to hold them to account. Instead of pointing to us to do it, why can't we point to the insurance carriers to say, hey, you know what? Maybe you could cut a little fat off of that $5 billion, cut a little bit of fat off of that CEO's salary. Why couldn't we point to them as well? Because you're in the middle. So why can't you point, I guess, with both hands in both directions?
It was not my intent to come here and point fingers. Let me be clear about that. My intent was to come here and state a position that I feel that it would benefit the people of South Carolina, in the insurance market, to create a long, sustainable marketplace and not follow the route of California, Illinois, and some of those states. As far as some of those costs, they probably could be. I'm sure they could be. But when about the latest number I got from a carrier, a huge carrier, about 56% of a rate is based on losses and all expenses associated with that. So you go and eliminate $3 billion maybe, I don't know. I'm not sure if that's going to have a huge impact. It may have some, but I think there's other more profitable ways to handle that. That's all I'm saying.
Thank you.
Representative Oremus.
Thank you, Mr. Finch, and thank you, Mr. Chairman. In your opinion, do you think with the risk mitigation or anything that Representative Johnson was saying, if we make all these changes, we did all the things necessary, don't you think the bar is going to just keep moving? And because you're saying everything is based off that loss. Well, there's always going to be storms. There's always going to be something. This is not like a new creation. But if they're looking at a loss and they're only looking at that one bucket and they're not looking at the profit side, do you not think that they're always going to change that bar because they're not getting the profits? Do you not think it's driven by greed?
Could be, but I will say that to take an example of stronger building codes, stronger, more active things like stormwater runoff, those type of things, it will reduce the severity. I can't speak for the carriers of what they're chasing the profits for, but I can tell you that in theoretical underwriting and rate-making decisions, those are things that should have and will have a positive impact to the rate as to the losses.
But you're saying the biggest factor is their losses or the losses of paying out policies, et cetera. So changing all these factors, I'm just trying to understand your position. Maybe it's not. I'm not going to get an answer here. Like I said, I'm not trying to attack you. I'm just trying. I feel like the bar is just going to keep moving because we're getting different answers from different people. We're just trying to get to the bottom of how to make the rates go down for people. And there hasn't been one simple answer from anybody for us to say, okay, this is exactly what we got to do. And it sounds like if we come after the insurance companies, they're going to say, we're going to leave you. And I'm with Rep. Johnson. It's kind of like call their bluff. We're just trying to do what's best of our constituents. And we're hearing the cries and hearing the concerns. And you said you're here, to help South Carolina and help the ratepayer. So we just need you to, give us your best opinion if we do this. And, I'm just not hearing a driving force saying, hey, you do these steps and and rates are going to go down. It's just like it keeps changing. It's like it's talking in circles. And I think we all are just kind of getting, we spent a lot of time. We're all here trying to get to the bottom of this. And I guess we're all just wanting to hear some consistency from everyone, and we're just not. So.
And it's not my point to be evasive, and I hope if I come across that.
No, you're not.
I'm trying to be as open and honest with you as I can. I can tell you that, from an agent's perspective, we want lower rates. I mean, we do not want an insurance company to walk in our office tomorrow and tell us that, hey, we're suspending homeowner rates for the next 6 months. We do not want to hear that. I cannot speak to their profitability mode, to their greed mode. I really don't think the greed is there like the public assumes it is. And I'm looking at the things that we can actually control. And the thing an agent control and help educate the consumers on is risk mitigation and some of those other things. And we've seen some of that actually take place and help in some circumstances. I mean, building codes have had a huge impact on it. That's why a lot of insurance companies now are looking for buildings that have had upgrades because their rates are reflecting some of that in the past 10 to 15 years. So that's...
Okay, good. Mr. Gagnon.
Thank you, Mr. Chairman. All right, Mr. Finch, I'm back. So what I like to see is if, you were talking earlier about the changes that were done in Florida and Georgia. I'm very interested in those. I think for us to sit here and kind of dance around with the numbers or whatever, but I want to see what changes that the legislatures have been able to do in those states to enhance competition amongst insurance companies, which I think is probably an excellent idea to get more insurance companies in here to compete with each other to make things more competitive for the consumer. Give them more options, more choices, perhaps even a lower rate. I get that we can't predict. I can't predict that I can walk across this floor and reach you without dying. Okay, I can't guarantee that. There's not guarantees like that. So I get it, I understand it, but I want to see what positive effect has happened in those other states because of what the legislature has done. What were some of the things that they had done, if you could just kind of put it in a little bit of a nutshell for us, some of the major things that were done in those states that helped them with the insurers coming in and perhaps their rates. I can't see rates ever going down. I just don't. You never see that in almost anything, but at least to stabilize and to flatten the curve, to use a stupid expression. But anyway, just some of your thoughts.
Their bill, and it's not something we're trying to address here with you. The biggest part of their bill was based on tort reform and litigation reform. To my knowledge, they've gone in and limited some punitive damages issues and some other laws that were on the books in Florida. That's some of the biggest items. And I would just say, I'm not sitting here promoting that the only thing to do is tort reform. I'm not saying that. I'm just saying there's a lot of things to look at before you make a move to suppress rates. Is what I'm asking you to do. Maybe a suggestion I would have is talk to the people in Florida, see what their issue was, which is we know what it was, and say, what did you do to combat it? What were some of the things you did? Can we mimic any of that? That's my suggestion to you.
All right, and I agree with you about especially government trying to dictate what rates are. That's always a disaster. Government trying to interfere with things like that, the free market and stuff, it ends up being a boondoggle. For those of you that are old enough and remember when the government was trying to limit, the prices on commodities and goods back in the 70s, whip inflation now and all that stuff was a complete disaster and ended up costing the taxpayer more in the long run. But I just want to see some practical some practical things that they have done in other states that we could repeat here and help maybe see some light at the end of this tunnel. Thank you.
Mr. Brown, I'll let Mr. Brabham speak if you.
One more. Mr. Bailey, Representative Bailey.
Thank you, Chairman. First of all, don't cut out my commercials. I love them. Very, very entertaining, especially during Super Bowl. The other thing is since we have an independent agent in front of us, I'm kind of wondering, we've heard over and over and over again that if you're not shopping around, you're not doing yourself justice. As an independent agent who I'm guessing represents multiple companies, do you have the same opinion of that? And do you see a lot of difference between one company and another when it concerns rates?
You're not going to like this answer. It depends on the product line, but for the most part, I'm not a big advocate for shopping and moving your insurance based solely on price. There's a lot of advertising to that. Switch and save hundreds of dollars. My personal opinion is there's some big factors to go into selecting who you go with. One is, and we're thinking those factors for the consumer. The first and foremost is the financial stability of the company, the needs of the client, and the ability of the company to pay claims. Because I can assure you that in January, if we write your homeowner's insurance and save you $200, then in October, when a windstorm comes through and you have damage, and the company is a little slow in paying the claims, you will not remember that $200 we saved you. That's human nature. So our big things are financial stability, ability to pay claims, and the needs of the customer. The price, it just comes. If it's affordable, what we recommend, great. But we recommend on those three principles.
Thank you.
Very good. Mr. Finch, thank you, sir.
Thank you
You have weathered the storm. We appreciate you very much.
I've had
being
worse
here.
storms. So
Good. Mr. Brabham?
Thank you. Good morning, Mr. Chairman and committee members. This looks like this will be fun. As Mr. Finch has said, that I too appreciate the opportunity to speak with you today. My name is Gus Brabham. I'm a partner at Brabham Griffin Insurance here in Columbia, and I am speaking to you as a representative of the Independent Insurance Agents and Brokers of South Carolina, and specifically an insurance agent who has been in this business for over 30 years, working with both the consumer and the insurance companies that we represent. Our role as independent agents is to work on behalf of our clients, the insured, in helping advise them of the risks they have, and then working with the insurance companies to find them the best available coverage at the best available cost. Our role is not to set rates or adjust claims, but rather be an advocate for our clients and help match up the two parties. It's an interesting position to be in because not all agencies represent the same carriers, and nor do they have the experience in every field. Also, every carrier decides what's within their appetite and what is not. They make these decisions based on their actuary's knowledge of a particular type of risk, the pricing they feel is appropriate, the environment or climate within the state they're operating, as well as various other criteria specific to each individual insurance company. When I first began in the insurance industry, it was because of a family friend who became a mentor by the name of Frank Norris, and he gave me an opportunity to work for him. At first, it was just a job, but as I gained more knowledge and some clients of my own, I realized that insurance was becoming my career. Insurance is the backbone of the economy, and without insurance, banks would not finance any type of property, buildings could not be built, people would not be able to protect the material goods they possess, and businesses would not be able to afford the risk that they take every day without knowing that they have an insurance company there to defend and provide for them in the time of a loss. The challenge, which goes back thousands of years, is how do we price it to keep it affordable while paying the claims and providing for the claimants? I have two key points that I'd like to leave with you today that I hope you'll consider. Number one being a competitive free market, and two, the availability of the carriers. They both depend on each other, and without them, the insurance market fails. The insurance marketplace operates best when there's competition amongst the carriers. They'll compete when they're allowed to set their rates and design their policies so that they are fair to both the consumer and to themselves. And it's no secret that, yes, insurance companies do strive to make a profit, just as all of us here today do. If you do not work to make a profit, then you'll soon be out of business, which doesn't help you or your clients. And in my 30 years, I've seen both hard and soft markets. Hard market is when the coverage is tough to find, the pricing is very high, and soft being when it seems every carrier wants to write everything, and the price is very low. Frank Norris would always say that the markets swing back and forth just as a pendulum does. We're currently in a hard market, as Mr. Finch has said, and hopefully nearing the end of it. I can say that we're starting to see property rates begin to flatten and in many cases come down. I have a property renewal that we were going over just yesterday, and the premium last year was $41,800. This year it's going to be $36,800. It's a 12% decrease, which isn't gigantic, but it's better than a 12% increase. What's interesting is that the policies that we have in the excess market are coming down faster than the voluntary market. And while I do not set rates, or have any control over the rates, I can give an educated guess, and that's that the excess market is allowed to move their rates faster as they see fit, and the voluntary market has to get approval through the various state departments of insurance. Because they move faster to increase their rates, they can move faster to decrease their rates. They see that they have rebounded and had some profitable years. They feel that they can cut the rates and begin to pick up some new business. It's a natural cause and effect that other excess market carriers will begin doing the same, quite possibly heading us into a softer market. This is a prime example of the free market working itself out. When competition is allowed to act and be carried out, the rates will settle where they need to be. The flip side of this is what I've witnessed with auto rates. There was a time when we'd see companies offering to cover a regular F-150 pickup truck for $400 to $500 a year. Today, that same truck is costing anywhere between $2,500 to $4,000 a year. We can't say it's because the carriers are making that much more money, because I do have some who have stopped writing certain types of risks in South Carolina because the claims were too unprofitable. They made the decision not to just keep increasing the rates, but to cancel their policies so that they would not have as many risks in our state. And this leads me to my second point for you to consider, which is availability. I believe strongly that we have an availability problem for certain classes of business. If the number of insurance companies is reduced so much that there are only a few to handle the load, then you can naturally expect the rates of the others to increase. And in certain cases like contractors, my fear is there could be a time when no one wants to write them in our state with appropriate coverage. The statute of repose in South Carolina is 8 years with the caveat that if gross negligence is claimed, then it's unlimited. The insurance companies know this, and they're struggling with how to do business here. Our agency insures a lot of home builders and subcontractors. We have not only seen the number of carriers be reduced over the years, but we've also seen the number of exclusions and conditions they apply to the policies increase along with their premiums. The insurance companies have a few options when faced with unpredictable and unsustainable losses. They can raise their rates, they can use more restrictive exclusions, or they can leave the state that they're operating in. And we're seeing all three options being exercised, and none are good for our clients and your constituents. I would ask that you consider reasonable solutions to this problem, one that could increase the number of carriers wanting to do business in South Carolina, which is increasing availability, increasing competition, and thus reducing the rates, while providing the best coverage to be available for the claims that come in. Right now, I feel that we're at a tipping point with this, and the insurance companies are keeping an eye on what we do and how we will handle tort reform. I am by no means suggesting that we make this an all one-sided in favor of the carrier or the contractor, but what I am saying is that I'd like for us to be reasonable with the decisions that are made. Thank you.
Thank you, sir.
Fire away.
Yes, sir. Incoming. Anyway, so I think Representative Gatch might have a question.
With all due respect to the citizens of South Carolina, I do not think this is a joking matter. They are under an incredible pressure. Their money doesn't go as far. And it's not a joke that insurance companies are increasing their rates and asking us to do something about it. So I don't think it's a laughing matter. I have a constituent who's allowed me to share his story. He owns several businesses. He's quite successful. Everything he touches turns to gold. He's that good. And I testified about this before. His name is Will. Will has one of the coolest restaurants bars, and he also has this amazing bar called Azalea Bar in my district. And he works through a broker. And he had been operating off of a new policy, but had not received the new policy paperwork yet. So they had renewed his policy for the new year, but he hadn't gotten it in hand yet. So he gets the policy and he realizes that his partner, who is no longer an actual owner in the business, was still listed on the policy. He goes back to his broker and asks him simply if you can amend it to take his name off of it since he doesn't own the business. The broker responds and says, no, you have to cancel your policy and be reissued a new one. Do you want to do that? He responds and says, yes, I'll do that, so long as all of the provisions and all of the costs and all of the coverage are the same. The broker responds, yes, that's exactly what will happen, but you have to cancel your insurance policy first. Let me send that to you. A few minutes go by, he doesn't receive the email. He gives the broker a call back. The broker doesn't know why the cancellation paperwork didn't go through, so he asks Will, can I cancel it for you? He goes, yes, so long as all the provisions, the costs, and the coverage are the same. He cancels the insurance policy and then proceeds to send him a new policy, under the understanding that the only difference would be that his name would be the only name on the policy and the old partner would not be there. He gets the policy, he starts reading through it, and what do you know is not in there? All of a sudden, his liquor liability insurance premium part, the coverage piece for liquor liability is not there. Well, that's a problem considering he's a bar. And they sell high-end things like, Pappy's and high-end stuff, $95 an ounce, expensive stuff. They don't sell enough food to outweigh the ratio there. That's the kind of bar this is. It's a cool bar, and I invite everybody to go to it. It's really neat. So he goes back and goes, hey, we got a problem, broker. There's no liquor liability insurance in here. And then the broker goes, ruh-roh, that's weird. So he calls the insurance company and then calls my client back, all within 45 minutes. This entire episode took place within 45 minutes. And the broker goes, I'm sorry to tell you, but they're not offering liquor liability anymore. He was already operating off of the policy. He was already operating under the policy at that time. He had 7 days to figure it out, and he was going to have to close his shop. This is like his retirement.
Yeah.
He's got staff, families who feed their kids with the salary that he provides. He had already basically worked out exactly how many days he had savings left in his bank account that he was going to be able to pay his staff, and he was going to be out of money. So I called Mr. Wise, the Department of Insurance, because it just so happens that the day before this is not a fake story. I'm not embellishing at all. The day before this, we had a meeting for this committee meeting, and Mr. Wise had told us that an insurance company is required by law that is currently on the books to notify the Department of Insurance anytime that they decide that they're not going to offer some type of coverage. Well, that's interesting. Seems like there's a problem here. So Mr. Wise, to his credit, investigated. And my client finally found the day before, the Saturday was going to be the last day that they could open. It was be the last day they were going to have to close their doors after Saturday evening. On Friday, he found somebody that was willing to give him a liquor liability policy, but it was for thousands and thousands of dollars more. Now, the thing that's interesting about this entire episode is multifaceted, right? Apparently, there's a law on the books that's not being enforced. Apparently, there's a law on the books that requires insurance companies, under the threat of, quote, sanctions, to notify the DOI when they're not going to offer insurance coverage anymore. But how in the world would they know unless Will or somebody similarly situated to him calls me, goes, oh my God, what do I do? And then I just happen to know that I can call the Department of Insurance and let them know about it. I still haven't gotten any kind of update on whether or not that insurance company, who I will not name, has been sanctioned for the failure to operate under the law. What disincentive do insurance companies have to do this to people like Will? What is the disincentive? The other interesting thing about this is that this body has now signed into law the liquor liability provision that takes out this scary alcohol exception to the joint and several liability question. The thing that all of the insurance companies were pointing to, saying, you got to get rid of this exception to joint and several because this is the thing that's raising the insurance premiums on small businesses who operate in alcohol. Well, we did that. We already did that. And then all of a sudden, this situation happens where an insurance carrier who was already covering my constituent for a week under a new policy decides that as soon as they have the opportunity to not offer it again, decides to pull it out from under his feet with only a week left? How much notice do you think, sir, is appropriate in a situation like that to give a business owner like my friend Will and constituent Will so that he would have the appropriate time to respond to find a new policy?
Yeah, first off, I'd like to offer an apology to you, sir. I did not mean to make light of the situation. This is my livelihood and my clients. If I gave any indication that I thought this was a laughing matter, please accept the apology. For your particular situation, that's got a lot of moving parts to it. I think that your friend's situation is terrible, obviously, and I really don't have an answer for you. What I can say is that from the carriers that I referenced for talking about leaving the state and stuff, every insurance company has what they call their appetite. I use that term in my talks. And so what they do is they have their appetite of what type of risk they want to write. From a homeowner's perspective, it may be houses that fall into the $300,000 to $700,000 range. It may be somebody that wants to write from a $700,000 to $2 million range. If you come out of that outside of that appetite, they don't want to insure that. The same can be said for the construction world. There are carriers that say we don't want to do any kind of products liability if it's east of I-95. Or if it's a certain type of risk, we're going to not write the auto that I mentioned earlier. And so, they're not just leaving the state and making a blanket decision. That situation, because I'm not the carrier and I don't notify insureds when they're canceling like that, I don't have anything to add to that. So I apologize. I do think it's a terrible situation, and I feel awful for your friend.
Well, you said that the insurance companies are watching what we do here, right? They're watching what we do here. Did they miss the part about how we got rid of the alcohol exception to joint and several liability? Did that get through without them noticing? Because the problem with your statement is they're watching what we do here, which the obvious implication is that we need to do the right thing so they stabilize or reduce rates. I would argue that we already tested that. We've already had a little opportunity for them to watch what we do, and we have incredible examples about how it doesn't care. To Mr. Johnson's point, who's running the show? Mm-hmm. Mm-hmm. So insurance companies, despite seeing the fact that we got rid of that part that would maybe reasonably require them to increase liquor liability premiums because of the ease at which they could be involved in a lawsuit, that no longer exists. And before the ink is dry on the law, you already have people pulling out. How do you explain that?
I don't do a lot of liquor liability, so I really don't have much to add to that conversation.
Fair enough.
I'm sorry.
What do you think about the underwriting profits as it relates to all the advertising and CEO salaries that I mentioned just a moment ago?
I think that every business, every field, they're going to spend advertising dollars how they best see fit. And you can look at all kinds of commercials that are on TV and billboards and things that people advertise. And if the insurance companies feel that they're getting a return on it, Progressive is a I don't even know if they're international, but I know that they're a national brand. A lot of the carriers that we represent in our agency are more regional in nature, so they're not in all 50 states like that. And so, I'm not sure what Progressive's losses are from state to state. I can't speak to that.
Is it fair to say that it seems a little disingenuous for a company to come to me and say, you know what, we're really struggling, and then for me to look at how much they spend on advertising and the number be $5 billion? Don't you think that's like a little like...
Do you know what their total revenue was? I don't.
$5 billion is still $5 billion, is it not?
85 billion? I mean... I think a lot of companies will have a certain percentage that they spend on advertising. I'm not going to say, I can't say that they're spending too much on advertising. That's their business decision, right?
Right. That's all for now. Thank you.
Mr. Bailey?
Thank you, Mr. Chairman. I guess the bill we worked on that Representative Gash is referring to, I'm guessing that there won't be any anticipation of what that bill is going to do until that bill has the opportunity to filter out and work out and see what the impact's going to be on the industry. And since I don't think that it is actually in effect until January the 1st of next year, it's going to be hard to see the tea leaves until the actual impact's felt. So maybe that's an explanation of why that legislation hasn't helped yet.
I would agree with that. I don't think that any law that goes into effect today regarding insurance and claims and stuff, you're going to have to wait to see how that plays out.
And seeing how it's not law until January the 1st, and we're probably going to have to wait to see that down the road.
Mm-hmm.
Okay. Well,
That would be my assumption.
I'm hoping that we have a positive impact.
Sure, I am too.
Any further questions? Mr. Brabham, thank you. Thank you
very
for
much.
being here. We appreciate
Yep.
independent insurance agents being here and representing your companies and your members. So thank you so much for taking time to be with us
Appreciate
today.
y'all's time.
Yes, sir, Mr. Chairman Dixon.
I really appreciate you being here. And just you folks keep in mind, we represent these companies. They don't listen to us most of the time when we try to tell them what to do. And we would like to change a lot, but there again, the biggest problem I think we have now is us that write a lot of residential stuff is the roof problem with the percentage of deductibles and things. So, but I didn't come up with that. The insurance companies come up with that. I mean, these guys are a whole lot bigger than Hickson Insurance. But there again, being a member with Becky McCormick, the Independent Agents Association, we all try to work together and deal with these companies, but they big. But I tell you, the Progressive guy was in my office the other day, and their goal is to be the #1 automobile writer in South Carolina. They hope to take over State Farm. And in my office, State Farm, not State Farm, Progressive is one of my lowest carriers as far as automobile insurance. And they've gone down in their rates in my office in North Augusta. And other ones, I was restricted for a year with one of our insurance companies. I couldn't write nothing. They put me out of business as far as writing new stuff with them. But glad we got Becky and her crowd with the big eye. We try to deal with these insurance companies because, we want to help the consumer. I mean, I'm a consumer. The only difference in what I make and what you pay for your property, I make 10%. So, I mean, I pay the same thing as an agent that I sell it to my customers, but I get to keep the 10%, sometimes less than that. But I did have one question. When you were talking about the excess market, all right, those are non-admitted companies?
Correct.
Okay, and so they don't have to go through the rate process. And so these non-admitted companies can do their own rate, and they really don't have to answer to the Department of Insurance.
And I think, I'm not in that world. I don't place the rates. I don't change the rates. I'm speaking completely anecdotally from what I'm seeing with renewals that we have. I feel like potentially with the voluntary market, it's harder and slower for them to get rate increases when they need to. And I think that they're oftentimes limited by the percentage that they can get, right? Whereas, and so they may have, 2 catastrophic years, and they're having to go up on their rates slower than, say, a Lloyd's of London. They're an excess market name there that people know. So for a Lloyd's of London, they could maybe go up on their rates a lot quicker right away, and so they can respond as the market is changing, a little bit more real time.
And what he's referring to is when a company goes for a rate increase or I think a decrease, they got to submit it to the Department of Insurance, and it takes their staff a while to go through why you want a rate increase or why you want a decrease. And Michael has told me several times some of the increases that some of these insurance companies ask for is unacceptable. And so then they have to go through and tell them why You tell me why you want to do this increase. So it is a, you got to be able to give some answers of why you want to do that. So there is some protection for the consumer there with the Department of Insurance.
There is. And I would also add that what we're seeing with the increases with, say, take homeowners, since we're talking about that right now, a lot of the homeowners increases, they're getting kind of a double whammy because you're getting the rate increase that the carrier has filed for, but you're also getting the property value increase being attached to it as well. You know, since COVID, everything has gone up dramatically. And that's also with cars, you know? I mean, the cars are more expensive. The electronics are harder to get. People have cars go out and then they're in a rental car for a month because they can't get them fixed. So, you know, there are a lot of other extenuating circumstances that I believe play into this.
Very good. Representative Gatch, follow up.
Thank you, Mr. Chairman. One last. No, it's just something. Yeah, well, I'm nice. I'm trying to be nice to everybody. One of the people, or the groups of people rather, one of the categories of folks that get totally left out of this conversation are the victims. Mm-hmm. I had a representative for Mothers Against Drunk Driving who said that in the entire tort reform debate in the House and the Senate this year, that the word victim was never used. And that's kind of striking to me because a lot of this concern comes from people who have had or will have severe, tragic, catastrophic injuries. And one of the things that we're being asked to consider is to limit their ability to recover. We got to keep the victims in mind. Mm-hmm. South Carolina is one, if not the highest death by drunk driving state in America. I know that North Carolina has about twice the population that we do. They only had 3 more deaths than we did due to drunk driving. Wow. So I just don't want to forget that there are a lot of suffering people who are attached to this conversation. And a lot of the times we just talk about money. Sure. So I just want to remember them.
That is a excellent point. And in the days where I feel like our office, my world, can shine is when a client calls and has a claim. You know, they're in their worst day that they probably experienced, whether it's a lawsuit that they've just been served with or whether it's the car accident or their house just caught on fire and burned. And if we're able to step in there and to help them, console them, and guide them through that process, to your point, they are a victim. And that's a terrible place to be.
Any further questions? Thank you very much, sir.
Thank you.
Thank you again for being here.
Yes, sir.
Very good. That is the last testimony we had on our file. Is there anyone in the audience who has anything to say or would like to add to the conversation? Now would be the appropriate time. And you're welcome to come to the podium. Anyone? Okay. Seeing none, we'll move forward. So what we're going to do now is go through a summary of some ideas, potential ideas that have been kind of promulgated based on the topics and all the discussions that we've had over these months. So I'm going to go through kind of an executive summary with you, if you'll bear with me, and then we can kind of open up for discussions. So we've had meetings over the interim. We've spent a lot of hours talking about insurance markets and insurance rates and what we can do to put downward pressure on rates and protect the public. That's the whole point of all of these hours we've spent together. We've heard testimony from the Department of Insurance, from SLED, Department of Motor Vehicles. We've heard from the University of South Carolina, professors. We've had Wind and Hail Underwriting Association testimony. We've heard from national carriers who do business in South Carolina. We've heard from South Carolina-based insurance companies and industry experts, and today from LLR and the independent agents. So we've heard from a very wide collection of professionals in this industry. So based on that testimony, it's very clear that reducing frequency and severity of claims and increasing competition are the two things that have a direct correlation on our insurance rates. We've heard proposed solutions from various experts to put downward pressure on insurance rates. We've heard proposed solutions that fall outside of the scope, quite frankly, of this committee. But I would mention that even if you don't hear some of those in this summary, that we've got the House of Representatives currently has three study committees that are ongoing. One being this committee. We've got a tort reform committee that's been meeting. And we've also got the DOT modernization committee that's been meeting. All three of those are really have tentacles into this same issue. We've talked about road safety. We've talked about how unsafe roads creates higher accidents. And of course, as the gentleman said today, Mr. Finch, I think eloquently stated how, loss his impact rate. So all of these committees are working in consort. So a couple of the things that that we do have that we feel like may be of interest for this committee. We're going to take proposals that are within the scope of what this committee was established to do. And hopefully we can craft some common sense legislation to help the policyholders as well to put downward pressure on insurance rates. The first thing we talked about, and Representative Bailey, I think you'll remember from when we had that initial study committee last year, is insurance fraud. We've heard testimony of the impact of fraud and what it has had on the insurance industry, on our rate premiums specifically. So, how do we deter fraud? A proposal that has come through has been to move the insurance fraud division from the Attorney General's office to the Department of Insurance by codifying the memorandum of understanding between DOI, SLED, and the AG's office and give teeth to the statute. You remember the testimony we've had about this over the past months. It continually comes up. So this would allow the Department of Insurance to refer the results of investigations to the Attorney General's office for prosecution and to LLR for actions against licensees. It'll also create law that'll make staging a motor vehicle collision a felony. You remember the fraud conversations we had and testimony we had regarding staged accidents and the cost that bore to our state's insurance industry. Now, also allow insurance fraud offenses to be taken up by the state grand jury. These are some of the ideas that have come related to the fraud issue. Today, we talked about predatory roofing. We've talked about predatory roofing in the past, and we thank LLR for being here to comment on that today. Almost all roofing claims involve an insurance policy. It's already illegal for roofers to do certain things, such as to represent or to negotiate or offer to advertise to represent or negotiate on behalf of an owner or possessor of residential real estate on any insurance claim in connection with the repair or replacement of roof systems. But, Representative Bailey, they're doing it anyway. So there's really nothing, according to the testimony that Virginia gave, I think, and that LLR can do about it. They don't have any teeth. So the idea is to deter predatory and unlicensed roofers from taking advantage of South Carolinians. One proposal would be to move investigation and enforcement from Title 40, which is LLR, to Title 38, which would be the insurance code, and allow the insurance experts to properly and more thoroughly investigate roofing issues involving insurance. The third overall item would be mitigation efforts. So the idea is to reduce the frequency and severity of claims by making homes more resilient and resistant to damage, which should in turn cost less to insure. Remember the testimony we had about bringing forward our building codes, how we've got the wind issues where we can actually go to the laboratory and watch the wind blow. So the proposal that's come from a lot of that testimony potential would be to expand the current Safe Home program structure to increase grant funding, to allow larger grant amounts to homeowners, require carriers to offer a fortified upgrade endorsement. If somebody's going to spend the money, then the insurance companies, we're saying, you've got to recognize that. Add a sales tax holiday at the beginning of hurricane season for homeowners who purchase mitigation materials. And on the coast, that's a big deal. The fourth item is educating the public. We've had a good bit of testimony about how many policyholders are really not affluent in the insurance market industry. So educated policyholders are less likely to buy coverages that they don't need. And policyholders who shop coverages are likely to find more affordable coverage options. I know that flies a little bit in the face of some testimony we heard today, but it's still something worth considering. That competition breeds savings. So the proposal would be to amend the duties of DOI Director Michael to educate the public on all lines of insurance and make recruiting new insurance companies to write businesses in South Carolina a priority. Director Wise talked about some new things that they're doing with education, outreach programs that they're putting on across the state. We think that this may need to be codified potentially to just be sure that that's going on an ongoing basis. The fifth thing, and this is kind of a big one, it may be a little controversial, but would be to repeal the $0 deductible for auto safety glass repairs. This is a remnant of days when South Carolina required inspections before a vehicle could be registered to drive on South Carolina roads. The idea was that if the state was going to require drivers to replace a cracked windshield before it passed inspection, that insurance should cover it at no cost to the owner. Well, those inspection requirements have long been off the books, but we left the $0 deductible in place. And today, it's costing companies millions of dollars, which ultimately goes back into rates. So again, this gets back to reducing the frequency and severity of claims. So the proposal would be simply to repeal it, to repeal the deductible, provide carriers the option to offer it so that policyholders can choose whether or not this is coverage they want in their policy. The sixth item is policyholder protections. When a policyholder is involved in an accident and is not at fault, they should not be penalized for claims on their insurance policy. We've talked about that over and over, and I'm sure our constituents have talked to us about that over and over. Drivers choosing to operate a vehicle without a statutorily required insurance covered shouldn't have the ability to benefit from the policy of an insured. So the proposal: prohibit insurers from rating, denying claims, refusing to issue a policy based on the existence of uninsured motorists or these type claims from any accidents in which the policyholder was not at fault. Doesn't that make sense? If somebody who's uninsured hits you and then you can't get a policy renewal because of that, that's not right. That's an issue. That's correct. I think the idea, as I understand it, and please correct me if I'm wrong, would be that you would not be penalized because you had a claim that you had to pay out to an uninsured motorist claim because of an uninsured accident. Prohibit uninsured drivers from recovering non-economic damages under an insured's policy with certain limited exceptions: gross negligence, fleeing the scene, commission of a felony. We'll get into more of these proposals in more depth as we move forward. These are what I'm presenting to you now are just kind of overarching ideas of things that we've heard from testimony. And finally, the last that I'm going to go over is accountability to the public. So when changes like these are made, the public should know what's going on, what we're thinking, and what it's going to, how it will impact them. So the proposal would be to require the Department of Insurance to submit an annual report showing the last 5 years of data and any impact this legislation or this potential legislation has had on insurance rates for South Carolina policyholders. It'll also require annual testimony before the House LCI Committee and Senate Banking and Insurance Committee regarding the status of the insurance market and performance from the previous year, so that we can have direct feedback on whether what we're doing, these policy initiatives, are actually doing anything to either improve, again, competition in the market and potential rate. So these are summary. These are kind of some summary things. At this point in time, I'd just like to open the floor, and kind of so we can just kind of talk through if there are any other policy ideas that any of you have. Now would be a good time for us to discuss them openly. So, Representative Johnson.
Thank you so much, Mr. Chair. Those sound like some good recommendations. I like the 5 years to bring back the information to see what's the impact of these decisions that we're making today is going to have. My question is, after 5 years and we get this data back, and if the rates have not come down, then what? that's the question I have for my colleagues in here. Then what? Is it a situation where, you know, people like myself and, you know, Representative Aremus and, you know, Representative Gatch say, aha, we told you so. Like, we told you that, you know, we were going to do everything that they asked us to do, and they still didn't honor their good word or their good faith. You know, what is it after that? Is there something that we want to put in there to say, you know, if the rates did not come down by 3% or 2% or something, then this committee then is, you know, rebuilt and comes back and is reconvened again and look at it again? Or, you know, what is that after that point?
That's an interesting point. Yes, sir, Representative Gatch.
Thank you, Mr. Chairman. The comments made by Mr. Johnson aren't hollow because this happened in Louisiana. In Louisiana, the insurance companies pitched a fit and said, you know, we're going to keep going up in our rates unless you enact this type of reform. And they ended up doing it. And guess what happened? It went up. And the governor made public comment about how he was basically hosed on that entire thing. So I feel like the way that your concerns are being framed are something that we need to keep in mind.
Good. Anyone? Yes, Chairman Hickson.
I got several questions. Can you go back to number 1?
Yes.
And was that you were dealing with licenses and LLR?
Yeah.
In our state, the way I understand it, every license comes from LLR except a law license and an insurance license. So LLR, I don't think, unless it's something I don't know, affects my license. It's Department of Insurance. So, but can you explain the process of turning it over to the Attorney General or turning it over to the Department of Insurance?
Basically, the idea is this is all getting back to enforcement.
Okay.
So we've heard from LLR today that they really don't have any enforcement teeth.
On us as agents or on contractors or who?
On the fraud, perpetrators of fraud.
Okay, they got it.
We're talking about perpetrators of fraud.
Okay.
That's where that discussion was coming from.
Okay.
And the idea is to get it, you know, so that the Department of Insurance, who does have expertise, who does have capacity to go after this, to then have that with SLED, between SLED and the Attorney General's office, get LLR out of that mix, because they don't have any teeth there. They don't have any persons in LLR who are investigators per se for fraud issues like that.
And I think we heard from the Attorney General and SLED, Department of Insurance, none of them have enough investigators, whether it be wherever they are. And one of the other things that how our insurance law is written, and I think insurance companies are required to send in if they think any kind of fraud is involved in something, whether it be so minor as you forgot to name a child that lived in your house and stuff like that. I think that might need to be looked at, because some of this stuff, we want the serious fraud, not you forgot to mention that you had a son or daughter lived in your house. But the way the law reads, I believe they got to submit that to Department of Insurance or somebody to investigate it, because we found they told a story, or maybe they forgot. And my other question would be, can you explain the windshield deductible again, please?
Yeah. Basically, the concept being that it's no longer required.
Okay.
But it can be still purchased.
So an insured can buy it back.
And if an individual wants that coverage, then it can be as part of their auto policy.
Okay.
But it just won't be required.
Right.
For 100% coverage.
Perfect.
Okay. Yep. Bailey.
Thank you, Chairman. First of all, talking about giving the investigators working with the DOI the ability to more authority. Are we talking about, because I think currently the investigators put together their case and then they transfer it to SLED, and then SLED works with the Attorney General. Are we talking about setting up DOI so you're bypassing that SLED element where they have their own law enforcement investigators, where they don't have to go through SLED to get to the Attorney General?
Yeah, and I think this gets back to the point of what Chairman Hickson was talking about a while ago. There's going to have to be, obviously, a corresponding component of any of this through our budget writing processes. In other words, if the Department of Insurance knows that they're going to need 2 or 3 new FTEs or whatever the case may be, it'll be incumbent upon them to make requests to fulfill their obligation, if that is clear. Because right now, they may or may not have staff to adequately handle some of the things we're asking them potentially to do. So I think that's a point well made, Rep. Bailey.
So the other thing that I wanted to see, because I read over the notes this morning, sorry I didn't do them previously, but I read over the notes this morning, and there was a mention by the Director of Insurance just making proposals of how you could tighten up on the fraud. And I think he made a reference to seizing property involved with a felony and how they could actually go after property that was utilized in a fraud that accounted to a felony. Did you look at that section to see and is there some kind of component that you can put in there to make sure we don't get in the Eighth Amendment issue where we're seizing somebody's house because they tried to get a new bumper on their car?
Yeah.
I mean, because you very easily, when you start seizing property, you can get in those Eighth Amendment deals where you're excessive.
That's certainly something that should be looked at. Okay. Anyone else? Any other ideas? Well, so we will have, obviously, time to have further discussions about this. But at this time, I would like to entertain a motion at this time that we go into executive session. We've got a legal briefing that's going to be made available to us pursuant to Section 304070. So, motion. So moved. Ladies and gentlemen, this committee will now go into executive session. Thank you very much for your attendance. We really appreciate your concern, your interest, and your taking time to be here with us. So we'll give a minute for the room to clear.
So moved.
Yeah. So we took no actions in executive session. What I would like to do at this point in time is entertain a motion to move a proposed draft of legislation forward that we can potentially pre-file so that we can continue the conversations about these proposed policy initiatives for insurance rate protection.
So moved.
You might have said it, but I don't remember. Was this all going to be one bill?
Yes, sir.
Not separate ones?
Not separate.
Okay, thank you.
So we have a motion, a second.
Second?
All in favor say aye.
Aye.
Opposed? The motion carries. Is there any further discussion for the good of the body? Hearing none, Representative Johnson moves that we do now adjourn. All in favor say aye. Aye. Thank you. We are adjourned. Thank you for your good work today.